Good morning, students. Welcome back to this session on accounting standards, which is about advanced accounting. So I understand you have been going through these sessions and you have been getting some more understanding as around these topics. So our agenda for today will be to cover three topics, which is about accounting standard 5, which is in relation to the profit or loss or prior period items, accounting estimates, and the accounting policies. Other than that, we also plan to cover a couple of topics. One is on Forex, which is AS11, and the other one will be on deferred tax, AS22. I would say all the topics are very important and quite interesting also. So I'm just hoping that you will also find these topics useful in terms of the application of these topics in relation to the examination and also otherwise practically. Now, whenever we discuss these topics, so because we have been, I have been starting today, so we can just take regular intervals in between. I'll just keep coming back to your queries. And in between, if you have any questions, any doubts, you can just raise a hand. You can just post your query, maybe in the query box or on the portal. Yeah. And I would also request you to just keep this session interactive the way you have been doing this in the previous sessions also. So we will be discussing questions, we will be discussing some of the content, and around the questions, we'll just try to discuss each and everything around these topics. Okay. So with this context, let's begin our discussion on accounting standard number 5, which is about profit or loss or prior period items or the accounting policies and estimates. Now, I understand, and all of these topics you have already covered in detail. So today what we plan to do is we'll just get on to the basic understanding of these topics once again in terms of the content, and then we'll also be practicing some questions. Now, AS5 is all about, we can say, presentation of certain line items in the statement of profit and loss, particularly in an entity. Okay, in the context of what is required to be presented in profit or loss, be it profit from the ordinary activities or from extraordinary activities or from exceptional items, which we'll discuss now. So there are certain terms which become important in the context of this presentation of profit and loss. One is ordinary activities. Now, what do you mean by ordinary activity? Ordinary activity, you can say, are those activities which are in relation to the business of the entity in its normal course. Okay, so when we talk about business of the entity in its normal course, what do you mean? So say, for example, a company which is into manufacturing of chemicals. Okay, so now what are going to be the activities in its normal course of business? In its normal course of business, this purchase of material for the manufacturing of chemical, sale of chemical, yeah. So, and the activities which are going to support all of these will be the one which we can say are in the normal course of business. And this is what we also call as ordinary activities in relation to this particular entity. Yeah. At times, this entity may also enter into some activities which are not really in the ordinary course of business, which could be of two types. One is extraordinary, other one is exceptional. So we'll talk about both of those types as to how those are different from the ordinary activities as we move further. Now, in relation to the ordinary activities, now why is this relevant? Whenever it comes to the presentation of profit, or if the organization is making any loss. Okay, so whenever it comes to the presentation of profit or loss, accounting standard requires that in case the entity has generated profit or loss from the ordinary activities, that should be presented separately on the face of the P&L. Similarly, like we also discussed that there could also be two more activities. One is extraordinary items and the other one is exceptional items. So if in case an entity has got some activities which are different from the ordinary activities, which are not in the normal course of business. And from those activities, if there is any impact on the P&L, whether that is resulting into profits or whether that is resulting into losses. Okay. Such type of items in terms of their impact are also required to be presented on the statement of P&L, but they will be presented as a separate line item. Okay, so when it comes to the P&L, what is it that we present first? Profit or loss from the ordinary activities. And then we present extraordinary items, and then we present the exceptional items. Okay. Now, let us first of all talk about extraordinary items. Now, what do you mean by extraordinary items? We can say events or transactions. Events or transactions which are distinct from the ordinary activities. Okay, of course, this has to be different from the ordinary activities. So, which is distinct from the ordinary activities and which are not expected to recur frequently or regular. Now, generally, this is something which you'll also see happening in case of an entity, that some of these activities, some of these transactions, some of these events, which are not in the normal course of business, they will not be occurring frequently or regularly. Means when it comes to the sale or purchase of chemical, for example, the entity that we talked about, there are going to be a lot of activities in relation to purchase, in relation to sale, and which are going to be regular. Means on a day in, day out basis, this has been happening. But when it comes to some other event, now what could be that event? Say, for example, during the year, there has been a loss to the item of property, plant, and equipment, okay, for which an insurance claim has been filed, and for which that insurance claim has been received during the year. So during the year, the entity would receive some income in respect of the loss which it incurred maybe in the previous years. And that loss was not in relation to the ordinary course of business or the activities in the ordinary course of business. That was something different. Okay. Now, these activities you will not find it to be occurring regularly or on a frequent basis. So that is how we understand the extraordinary items to be. Now, what could be the examples of such type of activities? Like we discussed, insurance claim, which is received. Okay. Or if in case there has been a loss of an item of PPE, attachment of property of an entity, or maybe say during the year, there was an earthquake, yeah, which resulted in some loss in respect of the plant, in respect of certain assets of the entity. Now, these could be some of the examples in relation to the extraordinary items, but every time we need to assess as to whether those are in the ordinary course of the business or not. Okay. And now, what is the requirement of the standard? The requirement of the standard is that whenever there is any such event or a transaction, and if that is impacting the P&L, impacting the P&L means either that could result into some income or that could result into some expenses. Of course, because that is going to hit the P&L. Now, such income or expense should be required, should be presented separately in the statement of P&L. So that's the requirement in relation to extraordinary items. Okay. Now, any questions if you have in relation to this, any doubts if you have? Any questions, any doubts in relation to this? Just feel free. So whenever you have any doubts, you can just raise hand, or otherwise you can just post your query. I'm just hoping that this part is understood in relation to what is an ordinary item or what is an extraordinary item. Okay. Now, moving further, we'll take an example to discuss this. A company, Y Limited, is engaged in the business of providing work contract service. Now, few days back, it received a notice from the GST department raising a demand of GST in respect of the services which the company is rendering. Recently, in respect of the demand which was raised by the department, company paid that tax amount. So that GST amount company paid. Okay, so company accepted the demand and paid that amount. In the books, now this payment is being recorded as extraordinary expenditure. Now, what is the accounting treatment which the company has done? So this GST which the company has paid, okay, whatever be the amount, company wants to present this as an extraordinary item. Now, because this is an expenditure, so that's why they plan to present it separately and they want to call it as extraordinary expenditure. Now, the question is whether this payment of tax be considered as an extraordinary item. What are your thoughts? Quickly, you can just answer this. You can share your thoughts. Yes, what do you think? Though we have an answer available on the screen, but still, if you can just try to think about it, what do you think? Whether it will be an extraordinary item or not, and why? Okay, so I received this response from Rashmi. She is saying no. What about others? Quickly, quickly. What do you think? Whether it should be an extraordinary item or not? So I think Sitkalam has also answered this. He's saying that it's not an extraordinary item because it's in the normal course of the business. And I think same is the response from Shubhajit. Pratima has got the same answer. Ritika is saying, of course, another accounting standard needs to be looked into this. So that's right, Ritika. We can definitely go and refer to the requirements of another accounting standard. But currently, in the context of AS5, we need to answer this as to how do you deal with this. So should you call it as an extraordinary item? Prashant is also saying no. Very good. So now let's try to quickly discuss this. See, if we talk about an item which is in relation to the ordinary course of business. Now, this demand of tax, this is in relation to the normal business activity. Of course, this demand will not be raised every now and then, which is fine. But whether this event or whether this transaction which has taken place, whether this is extraordinary, can we say that? The answer is no. This is very much in relation to the ordinary activities of this entity. And that is why if an entity wants to present it as extraordinary item, can we say that will be appropriate? The answer is no. That will not be appropriate. So that's why, how should this be presented? Of course, this will form part of profit or loss, which the entity will generate from the ordinary activities. Okay. Okay, so I see this query coming from Devashish. He's asking if the insurance company return the claim uh, due to fraud disclaimer thing. So what should be the accounting treatment? See, when it comes to the insurance claim, let's suppose if the insurance claim has been denied, so nothing has been received in relation to that particular insurance claim. Yeah. So you can say it's a procedural thing which has been going on. Procedural means company has been filing claims and whether that claim is getting accepted or not. So all of these procedures are going on. If the claim is rejected, so will it impact the P&L? Let's try to think about it. So if the claim is rejected, will it impact the P&L? The answer is no. Why? Because only when you receive the claim amount, you will take it to income. If the claim is not received, it will not impact the P&L. So that's why we are not required to do anything on this. Understood? Then I think I also got this response from Sangeetvani. Okay, great. So he is also saying that yes, it should be no. Very good. Yeah. All right. So let's move further on this. Now, next is about the exceptional items. Now, we discussed about ordinary activities. We also talked about extraordinary items. Just a minute, I can see some response in between. Okay, so Mohammed is asking, ordinary item का exception है क्या? है ये? I would say yes. So you can say it is something different from ordinary item. Okay, and something different from ordinary item could be of two types. One is extraordinary, which we discussed, and other one is exceptional, which we are going to discuss. Okay, yeah. Ritika is asking, can we say it's a prior period item? So Ritika, I would request if you could just hold this query maybe for some time. We are going to discuss prior period item and then we'll understand whether it's a prior period item or not. Okay, in terms of our explanation. But to answer your question, whether it is a prior period item, I would say no, this is not a prior period item. Okay. All right. Now moving on to the next item, that is about exceptional item. Now, what is exceptional item? Sometimes there could be some transactions, there could be some events, okay, which are of such size. Now, this is important, which are of such size, nature, or incidence. Means their size is significant, their nature is important. Okay, the incidence, if you look at the transaction, if you look at that particular event, that is quite significant in terms of the amount, in terms of the understanding of the users of the financial statements. Okay, so now if you have any transaction event and that is such that their disclosure is important, their disclosure is important to explain the performance of the entity for that particular period. Means the quantum is so big, the nature is so important that it becomes important for the entity to present that separately, to give a disclosure in respect of that item separately. Why? Because for the users of the financial statements who are going to look at the financial statements, it becomes important to understand such event or transaction separately. Okay. Now, such type of transactions or events, once again, if they impact the P&L, okay, now every time you need to understand we are talking about those events, transactions which are impacting the P&L. Okay, so if they impact the P&L, means if they are generating some income or they are resulting into some expenses, then such items are also required to be presented separately. Okay, but in this case, let's try to understand as to how these items would be different from ordinary activities or extraordinary activities. Now, these items you will not say are not in relation to the ordinary activities. Okay, so they would be in relation to the ordinary activities. Okay, so can you now understand the difference between extraordinary and exceptional? So extraordinary is something which is different from ordinary activities. Exceptional is something which is not different from extraordinary activities. They are something which is in relation to the ordinary activities, but their quantum is big. The nature is very important. The nature is so significant. That is why these items are called as exceptional items. Okay. That is why these items are called as exceptional items. Now, let's try to look at some examples as to what could be those exceptional items. One, write down of inventory. So inventory, we all understand as per the requirements of accounting standard 2, inventory is required to be valued at cost or NRV, whichever is lower. Correct? Yeah. Now, if in case during the year, inventory has been written down to NRV, inventory has been written down to NRV, and the amount of NRV was significantly lower from cost, in a way that the impact on P&L is significant. So let's suppose turnover of the company was 100 crore, company made a profit of 5 crore, and the inventory provision due to NRV, let's suppose, was amounting to 80 lakhs. Now, can we say that this amount is significant? Yes. Can we say that this is not in relation to the ordinary activities? No, this is very much in relation to the ordinary activities. But in this case, the size is important. Okay, and that's why this should be presented separate. Similarly, if we look at some more examples, say disposal of items of PP. So during the year, PP has been sold off. During the year, PP has been sold off. So company got a building, company sold the building. Now, in relation to the sale of the building, let's suppose company generated some income. Now, when the company has generated this income, now what do you call this as? Can you say that this is going to be an ordinary activity? Of course, this is because this building was in relation to the business purposes. So that's why somewhat you can say related to ordinary activity, but this is of course going to be exceptional. Yeah. So some more example could be like disposal of long-term investments if the litigations have been settled. Okay. Yeah. So there could be similar sort of examples which are required to be looked at in relation to exceptional items. Now, another point about exceptional items is what? That exceptional items is not dealt by AS5. So this comes from the requirements of Schedule 3. Schedule 3, you understand? So that is the requirement in relation to presentation of the financial statements. So the format that you get in relation to financial statements, so that is something which comes from Schedule 3. Okay. So this again comes from the requirements of Schedule 3, but very much part of the financial statements also. Okay. Now I can see this query coming from Srinivasan. He's asking if the GST refund or recovery, whether this would be extraordinary. See, when it comes to the GST refund, now for some entities, GST refund once again is an activity in the normal course of business. So there are a lot of businesses wherein the GST input happens to be extra on a regular basis. So what do they do? Maybe on a quarterly basis, monthly basis, they file the claim for GST refund, and every now and then they keep getting the refund. Okay, so this is very much a part of the ordinary activity. So that's why you will not call it as extraordinary. Understood? Okay. Now, any questions around the exceptional item? Any questions, any doubts around this? No. So Mohammad is saying no. So I'm just hoping you're clear on this. Yeah. So in between, if you have any doubts, if you want to just speak up, you can just raise hand and let me know. Yeah. All right. So I can see some query coming in. All right. So I'll just move back to the presentation. Okay, great. So now moving on to the next very important item. Yeah. So I would say in this particular standard, this is very, very important. Okay. So sorry, before I proceed on this, I think Ritika has a query. Ritika is asking separate disclosure means what? Means you will present it in the P&L separately or the notes to accounts. See, separate disclosure means in the P&L, in the statement of P&L, there will be a separate line item for this. Number one. Over and above that, when it comes to the notes to accounts, in the notes to accounts, you will give an explanation of that item. Okay, so it will be about both the things. So whenever you have something exceptional, present it separately in P&L and also give a disclosure in the notes to accounts. Similarly, the same requirement will be there for extraordinary items also. Okay. Yeah. All right. So now moving further. Now moving on to the next very important area, I would say in this particular standard, prior period items happens to be very, very important. Now, what is a prior period item? Prior period item, we can say, is an error or omission. Now, what is a prior period item? You can say it's an error or omission. So while presenting or preparing the financial statements, or you can say while preparing the books of accounts, if let's suppose an error was there, some omission was there. Now, what do you mean by error? So say, for example, instead of booking an expense under printing and stationery, that expense was booked under, let's suppose, communication. Okay. So the grouping is something which has got impacted. Similarly, let's suppose instead of capitalizing an item of PPE, that expense, that amount was expensed off, that was charged to P&L. Okay. Or it could be some arithmetical inaccuracy. Say, for example, while taking the total of inventory items, which will flow to the balance sheet. Maybe some wrong calculation was done, because of which the overall amount of inventory which has been presented is lower or maybe higher. It could be either way. Yeah. So it could be any mistake. It could be any mistake which is flowing into the financial statements. Okay. Now, as around this mistake, let's try to understand as to when is this mistake discovered. So if we go by this chart, so let's suppose we have this chart available. Okay. Now, say we are in 2023-24. Okay. Now, during the year, company found some error. Okay. So somewhere on, say, 1st of January 2024, company found that there is an error in the books of accounts or in the financial statements, there is an error. Now, what is the error? Say the inventory should have been valued at higher value. Currently, it's been valued at lower value. And when did this mistake happen? So when did this mistake took place? So when it was checked, when it was investigated, company found that this mistake is not made maybe few days back or in the current year. This mistake belongs to the previous years. So when they went back, they found that sometime in 2021-22, this mistake was made. Okay. So this mistake pertains to the previous years or maybe the previous year. It could be either way. That is what you call as prior period. And such type of mistakes, whether they, when they impact the P&L, means whether they are resulting in an expense or an income. Why an expense or income? Because the error could be of either types. It may again result in increasing the income or decreasing the income. It could be either way. Now, such type of mistake when you find in the current year, now what do you do? What do you do? Can we just ignore that mistake saying that it belongs to the previous year? And for the previous year, we understand financial statements are already final. Yeah, because for 21-22, year is done and dusted. Financial statements are signed off. Everything is approved. They have also been filed with the various regulators. Now, what do you do? Can we just ignore this mistake? The answer is no. We cannot ignore such mistakes. So what do? We need to rectify this error. Okay. So now, where does this sort of solution comes from? That comes from this particular accounting standard. This accounting standard says that whenever you have any such item, okay, something which is of this nature, what do? You will rectify that error in the current year. Current year means in the period when you discover that. And such type of error, if that is material, now this is again important. What do you mean by material? If the amount is significant. So let's suppose, say the size of the company is 500 crore in terms of turnover. Okay. And let's suppose company is making a profit of 70 crore year on year. And they found a mistake, let's suppose for rupees 1 lakh only. Okay. Now, will you call it as significant? The answer is no. Answer is no. But let's suppose if this error is for an amount of 1 crore, so will that be significant? The answer is yes. Okay. So now those significant errors are required to be rectified in the current year. But does this transaction belong to the current year? The answer is no. This transaction doesn't belong to the current year. So that's why in this case, what do you need to do? Standard says you need to present this item as prior period item. You will call this item as prior period item. And for this item, once again, what is the requirement? You will have to call it as prior period item and presented separately in the statement of P&L. Okay. And for this, a disclosure will also be required. Okay. Yeah. For this, a disclosure will also be required. The important point to note here is what? That only those errors which will hit the P&L, which will hit the P&L, means which will either result in some income or expenses, are required to be considered over here. Okay. Yeah. Any questions, any doubts if you have on this, please let me know. I can see one query coming from Srinivasan. Okay, so let's look at his query. So he's asking, while calculating ratios, so I think it's in relation to the extraordinary or exceptional item. He's asking, while calculating ratios, whether extraordinary or exceptional is considered. So that will again depend on the ratios, the type of ratios that you have been calculating. And of course, while calculating those ratios, you'll always exclude that, and you'll always give a note as to that this has been the treatment, or this is how the ratio has been calculated. So every time when the company will do this, so they will give a note around this. Okay. Now over to this prior period item. Any questions, any doubts if you have? Yes, everyone. So I think one more query comes from Srinivasan, and Mohammed seems to be clear on this. Very good. So Srinivasan is asking, prior period item is material. Financial statement should be restated for prior period, right? Otherwise, the profit or loss would be under or overstated during those periods. See, Srinivasan, under AS5, or you can say under Indian GAAP, you don't restate the financial statements. Okay. I think that is something which happens under other GAAP. Okay. So I'll just not discuss that other GAAP. That will otherwise simply confuse the students. Yeah. For our purposes, what we need to understand is prior period will not be restated. Okay. Financial statements in this case will be treated in a way that in the current year, when the error is found, you will rectify that. Okay. But you will present it separately. So that is what is required to be done. Okay. So now we can look at one example around this. Company B Limited has finalized its financial statements. In the financial statements, there are some prior period adjustments. On observation, it's been found. So what do they find? That B Limited has included prior period items, means some of the incomes or expenses in the respective head of income or expense. Now, tell me, what are your thoughts? Do you think this accounting treatment is correct? So what the company has done is, they have not presented those items separately as prior period item. So what did they do? So let's suppose there was an error. So let's suppose there was an error under employee cost. So under employee cost, they rectified that. They presented it under employee cost. Similarly, let's suppose there was an error in relation to revenue. So revenue got rectified. Means in the respective head, that correction has been made, and that has also been presented under the respective head. So what are your thoughts? Do you think this accounting treatment done by the company is correct? Yes or no? Quickly. Everyone. Yes, I'm waiting for a response. What do you think? Is this correct or not? Okay, so Pratima is saying no, this is not correct. Rashmi is saying this is not correct. Mohammed is saying not correct. Rashmi is saying it should be separately recorded. And I'm hoping, Rashmi, that you had a query around prior period item. Okay, so that is now clear. Let me just again discuss that query after this solution with you. Okay, so Sitkala is saying separate disclosure will be required, means this is not correct. So Kiran is also saying no, this is not correct. Sayantu is saying no, this is not correct. I think same is the response from Prashant. Yes, very good. Now in this case, because we understand it's a prior period item, so that's why what is the requirement of the standard? The moment we say it's a prior period item, it has to be presented separately. It has to be presented separately, and a disclosure around this item is required to be given. Okay. I think same is the response from Mohammed. So now let me just go back to the query of Rashmi. So Rashmi asked me that in the example that we discussed, Okay, so let me just go back to this example. Now, in this example, there was a demand of GST. There was a demand of GST, which the company has paid. Now, what do you call this payment as? So now this payment will hit the P&L. So if the GST amount has been paid in the current year, okay, so this will hit the P&L. Of course, there will be hit to the P&L. Now, what do you call it as? Do you call it as prior period item or not? So now everyone, you need to answer this. Yes, quickly. Yes. What do you call it as? Mohammed is saying no. I think Rashmi has herself answered this. No. So can you tell me why no? Why it should not be a prior period item? Yes. Everyone, please answer this. Why do you think this will not be a prior period item? Why would this not be a prior period item? Mohammed is saying because there is no mistake which the company has made. Very good. Rashmi is saying because this relates to the current year. Yes, absolutely correct. See, when it comes to this GST payment or this GST demand, can we say that this relates to the mistake which the company has made in the previous years? No. So this doesn't relate to the mistakes. Okay. So that's why if it is not a mistake which the company has made in the current year, or you can say it's an item which belongs to the current year only. So that's why. Will you call it as prior period item? No. So I think same is the response from Pooja. Pooja is saying it's not a prior period item because there is no error, there is no mistake, there is no omission. Okay. Great. So I'll move further. Now moving on to the next point, that is about accounting policy. Now, accounting policy is not something new. I'm sure you would have discussed accounting policy under accounting standard 1 also. So accounting standard number 1 talks about disclosure of accounting policies. Okay. Now this standard doesn't talk about accounting policies and the disclosures. This standard talks about the changes in the accounting policies. Yeah, but before that, let's quickly talk about an accounting policy. Now, what could be an accounting policy? Accounting policy, you can say, could be a principle, it could be a method, it could be a convention in relation to how the accounting treatment has been done in the books of accounts. Okay, how that has been done in the books of accounts. For example, in relation to accounting policy, can you give me some examples? Mohammed is saying LIFO से FIFO में जाना, so that is about change. I'll come to this point also. But can you please give me some examples of accounting policies? Everyone, please share examples of accounting policies. I'm not talking about changes in accounting policies. Give me examples of accounting policies. Yes, over to you. What are the examples of accounting policies? Yes, everyone. Some examples of accounting policies which come to your mind. Quickly. Okay, so I can see this response coming from Ritika. She's saying cost or NRV, whichever is lower in relation to inventory. Okay, inventory valuation, depreciation method. Very good. So these are all examples of accounting policy. I think Sangeetvani is also saying valuation of inventory. Yes, very good. So that's an example of accounting policy. Now, accounting policy, as we understand, is required to be applied in a consistent manner. Now, what do you mean by consistent manner? Just a minute. So say we have got various years. So this is year 1, this is year 2, this is year 3, this is year 4. Okay. Now, if an accounting policy is selected, chosen by an entity, they need to follow this consistently year on year. So in 1 year, if the company, let's suppose, and has an accounting policy in relation to valuation of inventory. So if let's suppose they follow FIFO method. So in year 2, they should follow that consistently. In year 3, they should follow this consistently. 4, they should follow this consistently. Means year on year, this accounting policy should not change. Understood? Yeah. But at times, this accounting policy may be required to be changed. So the standard says there are three situations. Now these are important. You should remember these three situations. In these three situations only, please understand, only an accounting policy can be changed, otherwise not. Now what are those three situations? One, when it is required by statute. Okay, so let's suppose it's a statutory requirement to change the accounting policy, or maybe because of the requirement of the accounting standard. For example, maybe a new accounting standard has been introduced. Maybe some changes have been made in the accounting standard, and because of which accounting treatment is required to be changed, accounting policy is required to be changed. Okay. And third, when the company considers this appropriate to change the accounting policy. Why? Because by doing that, presentation of financial statements will become more appropriate. Okay, because by doing that, presentation of financial statements will become more appropriate. So only in these three cases accounting policy can be changed, otherwise not. Clear on this? Yeah. So I can see a lot of responses around the accounting policy. So yes, very good. So okay, so now Rashmi is saying I'm clear. Very good. All right, so now let's also try to discuss some situations wherein a company may have a new accounting policy during the year, but that should not be considered to be a change in accounting policy. Say in the previous year, okay, say in the previous year, let's suppose if we talk about 2 years, so this is the current year, this is previous year. Okay, let's suppose in the previous year, company was manufacturing furniture. Okay, so company had got transactions in relation to manufacturing of furniture. Okay, now in the current year, what the company is doing is, over and above manufacturing, company has also started say trading of some electronic equipments. Yeah, so in the previous year, company was into manufacturing of furniture. In the current year, along with the manufacturing of furniture, company has also started trading of electronic equipment. Okay, now in the current year, new transactions will be entered into, new contracts will be entered into, which were not there in the previous year. So that's why for these new transactions, new contracts, company will have to do some accounting. Company will have to select an accounting policy, which was not there in the previous year. Now, this new accounting treatment or this kind of additional accounting policy, which the company will have to follow from the current year, can we say it's a change in accounting policy? What are your thoughts? Everyone, tell me, what do you think? This kind of additional or add-on in terms of the accounting policy, or you can say a new accounting policy, will you call it as a change in accounting policy or not? Tell me. Kritika is saying no. Pooja is saying no. What about others? Muhammad is saying no. What about others? Kiran is also saying no. Sitkala is saying no. Very good. So now, please understand that if the company enters into new transactions, new events, for doing that, some accounting policy will have to be framed. So it doesn't matter whether it was there in the previous year or not. If that is new, then it's a new accounting policy. It's not a change. Okay. Yeah. So this is again something which is very important for one to look at. All right. Yeah. So now moving on to the next topic, sorry, next area, that is about accounting estimates. Now, what is an accounting estimate? Accounting estimate, you can say, is an estimation or an approximation in relation to recording of a particular transaction or an event. For example, depreciation that we compute. Okay, so depreciation that we compute using useful life of the items of PPE, using residual value. So whenever depreciation is computed, what do you use? Useful life is required. Residual value is required. Now, for a company to assess useful life of plant and machinery, to assess useful life of building, to assess useful life of furniture with 100% accuracy, is it possible? The answer is no. See, they can very well be closer to the exact number of years, but to say that that is 100% accurate will not be possible. And that is what you mean by estimates. So those estimates for which accounting will be done, what do you call them as? Accounting estimates. Okay. They will always involve approximation. Approximation means what? For which 100% accuracy is not possible. Okay. For which 100% accuracy is not possible. Yeah. So now in relation to accounting estimates, because we understand the fact that they cannot be 100% accurate, some changes may arise. Okay, so now what is the change? Say useful life for a machine, for a building was initially assessed, say X number of years. Subsequently, company finds there are some changes in the useful life, some changes in the residual value. So now that change is required to be recorded, and whenever that change will be recorded, that will be called as a change in accounting estimate. So whenever such change will be recorded, it will be called as a change in accounting estimate. Okay. Now, how do you record that change in accounting estimate? Standard says that whenever there will be a change in accounting estimate, it should be recorded on a prospective basis, and the nature and amount of such change should be disclosed. Nature and amount of such change should be disclosed. So let's take an example to discuss this. Okay, so just give me a minute and we'll take one example. All right, so let's suppose there is a machine which has an amount of 10 lakhs. Okay. So this machine amount of 10 lakhs and its useful life, let's suppose, was estimated to be 10 years. Okay. Its useful life was estimated to be 10 years. Now, let's suppose it's been 2 years. Okay. So this is the date when the machine was acquired. So this is the date when the machine was acquired. Fine. Now it's been 2 years. So this is end of year 2. Now over a period of 2 years, this machine will get depreciated. Yeah. So let's assume its residual value to be 0. So now what is going to be the depreciation amount? So let's calculate depreciation on this. So year on year, applying SLM, depreciation on this, what is going to be the amount of depreciation? 1 lakh. Correct? Yeah. So Rashmi is saying for 2 lakhs, it will be 2 years. Very good. And I think same is the response from Mohammed. Yeah. So now in this case, year on year depreciation impact would have been 1 lakh. So over a period of 2 years, 2 lakhs depreciation has been charged on this. Now, at the end of year 2, what is going to be the balance of the machine? What is going to be its carrying amount? 10 lakhs minus 2 lakhs. Correct? So it will be 8 lakhs. It will be 8 lakhs. Yes or no? I think same is the response from Prashant also. Very good. Now, At the end of year 2, or you can say somewhere in year 3, say somewhere in year 3, say somewhere over here, say in year 3, company has reassessed its useful life. Company has reassessed the useful life. Now, at the end of year 2, what was the remaining useful life of the machine? At the end of year 2, remaining useful life was 8 years. But in year 3, company reassessed and found that its useful life will not be more than 4 years. Reassessed useful life, okay, and which is going to be 4 years now. Now, in this case, what do you call this change as? It's a change in an estimate. Yeah. So it's a change in estimate. So let's see, what is it that we will be required to do? What is it that we will be required to do? So in this case, because it's a change in estimate, so that's why it will be required to be recorded in the current year, and this recording will be prospective. So that's why in year 3, let's understand as to how do we compute depreciation. So the depreciation will be carrying amount at the end of year 2 divided by, okay, so this will be divided by remaining useful life, which has been reassessed. Okay, so that's why what is going to be the amount of depreciation? So it will be 8 lakhs. So 10 lakhs minus 1 lakh into 2. So it will be 8 lakhs divided by how many years are there? 4. How many years are there? 4. So that's why the amount of depreciation for year 3 and for the remaining years, year on year, will be what? 2 lakh per annum. 2 lakh per annum. Okay. Yeah. And I think everyone was solving this along with me. Very good. So I could see this response from Kiran, Rashmi. Great. Now I can see one query coming from Srinivasan. He's asking, so change in depreciation method is an estimate. Company can easily manipulate the financial statement. See, one point is that should we call it as a change in accounting estimate? Yes, it's a change in estimate. Okay, because it was an estimate earlier. So when the estimate will change, you'll have to call it as change in accounting estimate. Now, can we say that the company can do the manipulation? No, that is not possible, because every time company will also be required to follow all of these accounting standards with the right spirit. Okay, so the fraudulent nature, you should not be assuming that. And on the top of it, if the company will do that, then of course the company is also subject to various audits. Yeah. Okay, understood. Any questions on this? Any doubts around this if you have? As around the accounting estimates, because with this we can just conclude our discussion on AS5. So any questions, any doubts that you have, just feel free. Any questions around this? Then we'll move on to our next topic. Okay, so I can see this query coming from. Okay, so Mohammed is saying no, sir. Everything is okay. Very good. All right, so everyone clear so far? Yeah, so this topic I'm just hoping is clear. Okay, great. I think Sangeetvani is also saying great. Okay, so I can see one query coming from Sangeetvani. Is asking, sir, how will we account for this in year 2 or year 3? So in year 2, we discussed year 2, no change will be made. Why? Because in year 2, this estimate was not changed. So this change in estimate came in year 3. So in year 3, we discussed that the depreciation amount will change. In year 3, depreciation amount will change. Okay. And instead of 1 lakh per annum as the depreciation amount, what is going to be the charge of depreciation year on year? 2 lakh per annum. Okay. So that's going to be the change. Then I think Srinivasan is saying Infosys had done the changes in accounting estimates twice. Why? So I'll have to look into that specifically. Yeah, but accounting estimates can be changed. So it's not something that which cannot be changed. And please understand this factor. Estimates are what? They are approximation. So we are saying it's an estimate, means it's not 100% accurate. And that's why it's been called as estimate. Okay, and that's why they are subject to revisions. So if the accounting estimates are getting changed, so you should not worry. But at the same time, management needs to make the best judgment in terms of making the assessment. Okay. So you should not think as to why these changes are coming in. So these are possible. In fact, this is required to be reassessed year on year. Okay. Rashmi is asking how to disclose the changes in accounting estimates. See, the nature means when the useful life is changed. So in the disclosure, a note will be given that during the year, company has reassessed the useful life of machine and it's been changed from 10 years to 6 years. Because on an overall basis, it was 10 earlier, now it has become 6. Okay. And the impact due to that. So in the current year, what was the impact? That the depreciation amount got changed. Okay. That got increased. So that impact is also required to be shown. Excuse me. All right. Clear? Okay. So next query, I think this comes, okay. So the query is change in depreciation method is a change in accounting estimate, but shouldn't this be an exceptional item? Now let's think about it, because we have discussed exceptional item. See, accounting estimate is what? Accounting estimate is an estimate, which is in relation to the accounting which the company has been doing on approximation basis. Fine. Now, to say whether this will be exceptional or not. Now, can we say it will be exceptional? The answer is no. It will not be exceptional. Why? Because in the normal course of business, in the normal course of activities which the entity will be undertaking, this accounting is required to be changed. This useful life is changing. Okay, can we say that this change in useful life is exceptional in nature? No, this is not exceptional in nature. This is a change in accounting estimate which becomes different from exceptional item, and that's why you will present it separately and you will also disclose it separately. You will clarify that this is in the nature of change in accounting estimate. Okay. Mohammed is asking in relation to accounting estimate, चेंज इन अकाउंटिंग एस्टिमेट है इफ मटेरियल इफेक्ट है तो डिस्क्लोजर देना है ऑफ कोर्स यस yeah so all of these if they are material they are definitely required to be disclosed. Sitkala is asking
Achal,
sir
can I take a minute, Achal?
yeah sure sir.
Yeah, good morning, Achal ji, Asa ji, Ajit ji, and all future chartered accountants. The way I study advanced accounting, dear students, is try to remember the standard number and the title of the standard. And then in each standard, maybe in 5-6 line, we can understand the substance of the standard. So AS1 is disclosure of accounting policies. AS2, now this AS is under which rules and which section? Can somebody answer me? What is the rule name under which these accounting standards are issued? These are issued under the Companies Accounting Standard Rules 2021. And this rule is made under Section 133 of the Companies Act 2013. So AS2 is inventories. Then AS3, now we have two statements, balance sheet and profit and loss account. So AS3 is a cash flow statement. Now if three statements are prepared, AS4 is a events after the reporting date. AS5 is a prior period item. AS6, which was depreciation, is merged with AS10, property, plant, equipment. All three are singular. The words are singular. The AS7 is construction contracts. AS8 was on research and development, which was like intangible expenditure. Now that is covered under AS26. So like this, we can remember all 27 standards, though the number is up to 29, but the two numbers, AS6 and AS8 is not there. So AS9 revenue, AS10 is on what? AS11 is foreign exchange, AS12 government grants, AS13 is investments, AS14 amalgamation, AS15 employee benefits, AS16 borrowing cost, AS17 is Achal ji AS17 किस पे है?
That is on segment. Sir, that is on segments.
Segment reporting 7 and segment reporting. AS10 किस पर है? Achal ji.
Sir, AS10 is on depreciation as well as PPE.
ना ना ना. AS10 depreciation पे नहीं है.
Sir, AS10 is now revised. So now it covers property, plant, and equipment, including depreciation. So earlier there were two accounting standards.
AS10 is on property, plant, equipment. And earlier AS10 was?
Earlier, sir, there were two accounting standards, AS6, which dealt with depreciation, and AS10, which dealt with the requirements of fixed assets. So we used to call it as fixed assets. Now AS6 has been done away with. Now we have got this AS10 revised, which deals with both the requirements.
So AS18 related party, AS19 leases, AS20 earning per share, 21 is a consolidated statement. So 2 we make it 1. AS22 income taxes, AS23 investment in associate, AS24 is on discontinued operations. You know, there is a 4 and there is in discontinued, there is a D alphabet. AS25 is interim reporting. So we do the, 100% is a annual reporting. So 25 is a quarterly reporting. 26 is intangible assets. 27 is investment in joint ventures. 28 is impairment. 29 is provisions, contingent assets and contingent liabilities. Any questions any student want to ask me? This is CA Dr. Rajkumar Adukia, Chairman of Board of Studies. And our mission at board is that every student must pass CA exam in the first attempt. It's a very easy thing to do. Yeah, please go ahead. Ritika, go ahead, unmute and please ask question.
Sir, on app, the videos are not properly updated. The sir has told us to complete AS5, AS11 and AS22 and come in the lecture. But the video has not properly updated.
Asha ji, just see na, Ajit ji and Asha ji, kindly find out. And I wanted the whole note on each subject, what we are instructing in the class. And Achal ji, if you can take some extra effort and the mobile app access should be given to each faculty so they can also see themselves what they are requesting to the students, whether that is available on the portal and app.
Sure.
Asa ji, will you just take care of this?
Yes, sir.
Asa
Yes,
ji
sir.
and Ajit ji. Any technical query, and you have email IDs. Ajit ji, you post because currently the posting the to all is not there. You can post them my details also. Any other query? I am posting my contact details, the mobile number and email ID. So any students can, any difficulty in understanding the subject, any chapter, anything, they can write to us. Any other student want to ask anything? Achalji, you can go ahead. Thank you.
Sure, sir. Thanks. And I would say, students, some of the insights which sir has shared will be really helpful, not only for the purposes of examination. If you follow this, you will find that practically also, okay, these insights are going to help you in terms of the implementation of these areas. Okay, so now I'll come back to some of your queries and then we'll move on to our next topic. So I think Srinivasan is asking, sir, why this depreciation change is considered as prospective and not retrospective? See, when it comes to a depreciation change, please understand that this depreciation change is what? It's an estimate. Okay. So whenever an estimate will be changed, what do you call it as? Change in accounting estimate. Yeah. Changes in accounting estimates are not required to be recorded retrospectively. They are also required to be recorded prospectively. And let's quickly think about the rationale around it. See, whenever you are changing the approximation estimate, so it's not a mistake which you had made in the previous year, which you are rectifying now. Now, there are a lot of reasons because of which this estimate may change. Maybe some additional information has come in, some additional inputs have come in. Okay, so the thought process which was not there earlier, some of the updates may have come in, which have resulted in those changes. So that's why, because these are effective from now on, when these changes have come in, that is when you should consider this recording. And that's why this is required to be recorded prospectively and not retrospectively. Okay. Uh, then I think Sangeetmani, I have answered your question. Is it? Yeah. Okay. So then I think Sitkala is asking, sir, in example one, you gave it is exceptional. So in example one, that was a different situation, huh? Wherein we discussed about exceptional. Okay. But when it comes to a change in accounting estimate, change in accounting estimate is different from exception. So you can say all of these items are different. Ordinary is different, extraordinary is different, exceptional is different, accounting policy change is different, and accounting estimates changes are different. So you can say these are 5 topics which are all different from each other. Okay, so they are not sort of, you can say, similar. They are different. Understood? Yeah. Okay, great. All right, so now we can just move on to our next topic, and I'm just hoping no break is required. You can just quickly confirm. I'm hoping that you don't need a break, so we can just continue with the topic that we have. Yes, quickly. Everyone, please confirm. So all good to go. No break is required. Yeah, sure. Okay, great. Mohammed is saying no break, sir. Yeah, Pooja is also saying no break. We can just go ahead. Very good. All right. So I'm going to pick up the next topic, which is about AS11, which is in relation to Forex. Again, a very interesting topic. And in terms of its practical implementation, you will find this to be very useful. So now, what is this AS11 talking about? AS11 talks about transactions which will take place in a foreign currency. Okay, and for this to be understood, we need to understand the meaning of a foreign currency. Now, what is a foreign currency? Say there is a company in India. This company in India, for the purposes of meeting its legal requirements, means for statutory reporting, for various other reportings in India, will have to prepare its financial statements in which currency? Can you tell me quickly, everyone? An Indian company will have to prepare its financial statements in which currency? Over to you, quickly, everyone. Which currency that Indian company will use? Ruhani is saying INR. Very good. Rashmi is saying INR. Very good. Sento, Prashant, they are saying INR. Great. Okay, now, because an Indian company will prepare its financial statements in INR, so that's why each and every accounting that it will do will be in which currency? INR. Okay. Now, any currency which is other than INR for this Indian company will therefore become what? That will be called as foreign currency. And this foreign currency as a term is not new to us. Okay, we all understand about the meaning of foreign currency. Now, how is this relevant in the context of accounting? Let's try to understand that. Say a company which is in India has got a loan from US. Okay, this company has taken a loan from US, and this loan is external commercial borrowing, means it's a loan in foreign currency. It's taken in USD instead of INR. The loan is taken in which currency? USD. Okay. Now, when this loan is taken in USD, for the purposes of preparing books of accounts in India, company will have to record this in USD or INR. INR, of course. This will have to be recorded in INR. Yeah. So now when this has to be recorded in INR, what do you need to do? You need to change this currency from USD to INR. You need to change this currency from USD to INR. And that is what we call as Forex change. Okay, that is what we call as change in foreign currency. Means recording of a transaction which has taken place in foreign currency into local currency, into INR. Okay, so we'll discuss with some examples as to how is this relevant. Yeah, so now let's take an example to discuss this. Say a company purchased goods worth USD 1000. Okay, goods worth of USD 1000 have been purchased. On which date? Let's suppose 25th May 2024. Okay, now as on today, what is the rate of conversion of USD? So let's suppose USD to INR is what? Say it's 83. Okay, hypothetically, let's say it's 83. Now, for a company in India, let's think about the accounting entry. So what is the accounting entry which the company will pass? So company will say purchases debit to vendor. Yeah. So this is the accounting entry which the company will pass. So can the company pass this accounting entry in USD? Can the company pass this accounting entry in USD? No, that's not possible. So this entry will have to be passed in INR. So that's why what is required to be done? Conversion of this transaction from USD to INR is required. Okay. And how do you do that? Using the rate of the date of the transaction, means 1000 into 83. So how do you record this? At 83,000 INR. Okay. So in terms of INR, this will be recorded. So what is the amount at which it will be recorded? 83,000. Clear on this? Clear on this? So this is what we call as a recording of a transaction which has taken place in foreign currency into local currency. Yeah. So now, as around this, there are certain rules which are required to be looked at. So let's try to understand those rules. What are those rules which are required to be looked at? Standard says, whenever it's the initial recognition, at the time of initial recognition, how do you record that? By applying to the foreign currency amount. exchange rate between reporting currency and foreign currency. So in our example, so what is the exchange rate that we applied? 83. Yeah. So this is what you call as the rule for initial recognition. Rule for initial recognition. Okay. Now, so let's suppose this recording is done. So goods worth of USD 1000 were purchased and that has been recorded. Now, subsequently also, once this recording has taken place, subsequently also some remeasurement requirements are there. There are some remeasurement requirements. Okay. But those remeasurement requirements are dependent on the type of item it is. Means whether that item is monetary or non-monetary. So let's quickly go back to our understanding, go back to this monetary or non-monetary, and then we'll talk about it. Now, what is a monetary item? Monetary item means those items, means those assets or liabilities wherein the amount to be received or paid is fixed or determinable. For example, debtors. In case of debtor, the amount to be received is fixed, determinable, yes or no? Yeah. So that's why such type of assets are called as monetary assets. Similarly, if we talk about creditors, if we talk about loan, borrowing, if we talk about bank balance, these are all examples of what? Monetary items. Monetary items. Clear? Now, anything which is not monetary, what do you call it as? Non-monetary items. Anything which is not monetary will be non-monetary. For example, property, plant and equipment. Now for property, plant and equipment, can we say that the amount to receive is fixed? No, because till the time it's not sold, you will not know that. Okay. For inventory, can we say that the amount is fixed? No. Once the inventory will be sold, it will get converted into debtor and then it will become fixed or determinable. Till that time, what do you call that item as? You will call that item as non-monetary. Okay. Now, we just wanted to discuss about monetary and non-monetary first. Now, this will be relevant for the purposes of recording of foreign currency transaction. Yeah. So I think this can be best understood with the help of some examples. So I'll go back to that example that we picked up. And over there, we will discuss this requirement. Okay. Now, I understand in the meantime, you have some doubts. Okay. So let me just go to your doubts. Okay, sorry. Mohammed is saying, okay, so Mohammed was giving some examples of monetary and non-monetary. Very good. Okay, Ritika is asking, sir, foreign currency rate is changing frequently. If purchase is done in January, but the payment is not made. So we'll come to that. Okay. So that part is yet to be discussed. So I'll come to that. Okay. Now, in this example, the rate on the date of the transaction, what do you call it as? Spot rate. Rate on the date of the transaction, that is called as spot rate. Okay. Now, this accounting entry was passed on 25th May 2024 because that is when the purchases have been made. Clear? Now, let's suppose we go to 31st March 2025. Okay. Until that time, this vendor is not yet paid. Okay, let's suppose the amount in respect of this vendor is still outstanding, that is not paid. Now, in that case, standard says that if there is any monetary asset or liability, please remember, any monetary asset or liability, and that is outstanding at the year end. Monetary asset or liability outstanding at the year end, that is required to be restated. Now, what do you mean by restatement? So let's understand. Let's assume that on 31st March 2025, this is outstanding. And on that date, rate is what? 84. Let's suppose rate is 84. Let's assume that. Okay. Now, first of all, what do we need to find out? That whether this liability, so we had a liability, this liability is continuing in the books of accounts, whether this liability is monetary or not. So can you tell me in this case, this vendor balance is monetary or non-monetary? Over to you. What do you think? Is this monetary or non-monetary? Okay, Rashmi is saying it's monetary. What about others? Ritika is saying it's monetary. What about others? Okay, great. Kiran, Pooja, I can see a lot of responses. Aditya, they are all saying it's monetary. Very good. So I think Srinivasan has a query before we get on to the restatement. He's asking, sir, in this transaction, which you recorded on 25th May, you have taken the rate of the date of the transaction. You have not taken average rate. Why is that so? I'll come to that point. Okay. I'll come to that point as to why average rate has not been taken by. I'll discuss that. Fine. Okay. Now, because it's a monetary balance, so that's why at the year end, this vendor balance will be required to be restated. Restated means what? Now the currency amount has changed from 84 to 83. Sorry, 83 to 84. So that's why this amount will have to be restated. So this difference between the exchange rate means 1. Multiply the foreign currency balance. What was the foreign currency balance? Tell me, what was the foreign currency balance? 1000. So this is the amount by which this liability will have to be restated. So that's why what will happen? We will have to increase the amount of liability. So we'll say to vendor balance. We'll say to vendor balance 1000 means the liability amount will go up by 1000. Okay. And where will this impact go? This impact will go to P&L as a foreign exchange loss. So we'll say foreign exchange loss debit to vendor, and the amount of 1000 is what? This is what you call as restatement. Okay, this is what you call as restatement. So whenever there is any monetary asset or liability, this is how it will be restated at the year end. Clear on this? Yeah. Let's suppose if this asset or liability is non-monetary. So do you need to do anything? No. If this is non-monetary, you will not be required to do anything. Okay. If this is monetary, only then you will be required to restate that. Okay. Clear on this? Now. Okay. So now Srinivasan is asking, sir, this exchange gain or loss, where do you present it? Above PAT or below PAT? So this is of course a part of ordinary activities. It's in the normal course of the business. So this will definitely go in the ordinary activities before tax, because after that tax will have to be paid. Okay. Okay, so great yet that you have been solving along with me. Very good. So now let's move back and let's talk about another concept which is called as integral and non-integral. Because with this context of integral and non-integral, we will again discuss this aspect of monetary and non-monetary. Okay. Now, when it comes to the foreign operation, now what could be a foreign operation? Say a company has got a branch outside India. Company has got a subsidiary outside India. These are all examples of what? Its operations outside India. That is what you call as foreign operation. Okay. Now, foreign operations could be of two types. Foreign operations could be of two types, integral and non-integral. Now, what do you mean by integral and non-integral? Integral means something which is a part of the reporting entity itself, means as if it were an extension of the reporting entity's operations. Now, what could be an example of integral for an operation? Can you tell me? Over to you quickly. Can you give me an example of integral for an operation? Over to you, everyone. Pooja is saying branches. Very good. Dependent branch, to be precise. Great. So now branch is what? Branch is nothing but an extension of the entity. Means an entity is extending its operations, maybe at some other location. And that is how you define integral operation to be. As against that, something which is non-integral, or you can say something which is not integral. What do you call it as? Non-integral. Non-integral means which is not an extension of the operations of the entity, which is not an extension of the operations of the entity. Now, in relation of non-integral, standard provides us some guidance. Standard provides us some guidance. Standard says that there are some criteria which you can look at always to assess whether the operation will become integral or non-integral. Okay. And that's why you can make a note of these points. Huh? These are important points for the purposes of your examination, for the purposes of your understanding. These are important points. Okay. So now what is the basis using which we can differentiate between integral and non-integral? Of course, we talked about it conceptually, because if it's an extension of the entity, then it will be integral, otherwise non-integral. But there are some more criteria one can look at to assess whether the operation will be integral or non-integral. Now, what are those criteria? One, we need to check whether that foreign operation is operating with some autonomy or not. Means in terms of decision making, in terms of activities it undertakes. Okay. So is it really dependent on the parent or the reporting entity, or is it making the decisions on its own? Means whether it has got autonomy or not. If the autonomy is there, if it is not dependent, then what do you call it as? Non-integral. Otherwise, integral. Then, in case of non-integral, transactions between the reporting entity and the foreign operation will not be significant. Okay. Transactions will not be significant. They will not be significant. When it comes to the dependence in relation to the financing, in relation to the funds which the operation will require, if that is significantly dependent on the parent reporting entity in respect of funds it requires, then what does it become? Integral. Otherwise, non-integral. Otherwise, non-integral. When it comes to the activities, operations, or you can say the transactions in relation to the expenses, procurement of material, various other components of products or services. Yeah. So if the foreign operation is procuring all of those items, making all of those expenses, entering into all of those transactions in its own local currency, and not the currency of the reporting entity, then what do you call it as? Then it will be non-integral. Why? Because it's not dependent on the reporting entity. It's not dependent on the reporting entity. Okay. Similarly, if we talk about the cash flows, if the cash flows of the foreign operation are maintained on its own, it's managing that on its own, then what do you call it as? Non-integral. Okay. Yeah. So these are some of the criterias which you always need to look at, basis which you will have to decide whether the foreign operation will be integral or non-integral. Clear on this? Any questions that you have to assess whether an operation will become integral or non-integral, please let me know. Yes, quickly. Any questions, any doubts that you have as around this? Over to you. Any questions, any doubts? No? Mohammed is saying no, it's clear. Okay, so I think Pooja has a query. Just a minute. Yes, Pooja, please go ahead with your query.
अरे मतलब इंटीग्रल और नॉन इंटीग्रल जिसके एसोसिएट होते हैं या जॉइंट वेंचर होते हैं तो वो किस कैटेगरी में आएंगे सर? नॉन इंटीग्रल या इंटीग्रल?
See, agar if we talk about non-integral, let's try to understand the thought process around the non-integral. Non-integral is something you can say which is not dependent on others, which is operating with its own autonomy. When you talk about joint venture or associate, so let's suppose there is a company A Limited. Okay, A Limited has got a joint venture, say BV Limited. Now to say whether BV Limited is a non-integral or integral, assessment is going to be what? The factors that we discussed, not whether BV is a JV or associate. Okay. Generally, when it comes to a separate legal entity in the form of subsidiary, JV, or associate, generally you will find them to be non-integral. Okay, clear on this?
Thank you, sir.
Great. Anyone else? Any more queries on this? Okay, yeah. Srinivasan is asking, sir, my question still remains unanswered. No, Srinivasan, I'll come to your query. Yeah? I'll come to your query. So that part is yet to be discussed. I'll talk about it. I remember that. Don't worry. Okay, no questions? All right. So now moving further. Now this part of assessment of integral and non-integral is important. Why? Because depending on whether the operation is integral or non-integral, this recording of the foreign currency transactions, foreign currency balances may vary. Okay, now what is that part? Sorry, in between that, I think this query comes from Ritika. Ritika is asking, non-integral means non-associate companies, no JV? No. See, these are two different topics. Associate or JV is dealt by separate accounting standard. Associate is a separate legal entity. It's a company. JV is a separate legal entity. It's a company. Okay. To say whether whenever associate will be non-integral always? No. Or to say that if it is non-integral, it will not become an associate? No. So you can say it's a completely different criteria. Okay. And up these two, let's keep it separate completely. Forget about whether a company is an associate or JV at the time of its assessment of integral or non-integral. Okay. So let's approach it this way. Clear on this, Ritika? Please confirm. Ritika, are you clear on this? Okay, great. Now, how is this integral or non-integral operate? Important. See, when it comes to the integral foreign operation, the recording in relation to all of those transactions of integral foreign operation will be in the financial statements of the reporting entity directly, as if those transactions belong to the reporting entity only. Okay, so all the transactions, all the adjustments in relation to integral foreign operation will be done by the reporting entity by assuming as if all those transactions are those of the reporting entity itself. Okay, so you can just simply say that because integral foreign operation will be a part of reporting entity, so that's why all of its transactions will also be considered to be transactions of reporting entity. And how do you record that? Like we discussed. Okay, remember we discussed that example of purchases. So let's suppose purchases are made by foreign operation. So how will the reporting entity record that? As if it's the transaction of reporting entity. As simple as that. Okay. Now, when it comes to non-integral foreign operation, when it comes to non-integral foreign operation. In case of non-integral foreign operation, you can say it's a kind of separate entity altogether. Yeah. And for which each and every transaction will first be recorded by that non-integral foreign operation. And then that will have to be translated. Then that will have to be translated in the books of reporting entity. Let's discuss this with the help of an example. I think with the help of example, you will get clarity around this. Okay. So let's suppose there is a reporting entity A Limited. A Limited is preparing its financial statements in INR. Fine. Yeah. And let's suppose there is one non-integral foreign operation. So let's suppose this is FO1. All right. So now we are talking about these two. Now, when it comes to non-integral foreign operation, so how do you record it? So if let's suppose, say this is in USD. Say this is in USD. Every time in relation to this non-integral foreign operation, we'll have to look at its assets, its liabilities, and various other items of P&L. So you can say you can look at the trial balance of this foreign operation. Fine. So let's suppose this is the trial balance. Just give me a minute. Yeah. Now, because it's a non-integral foreign operation, that's why all of its transactions, all of its balances will not be considered to the one which belongs to A Limited. No. In this case, at the year end, what do you need to do? For the purposes of consolidation, now this is again something which we will discuss under accounting standard 21. For the purposes of consolidation, this non-integral foreign operation will have to convert all the balances which it has in USD into INR. Okay, so all of these balances will have to be converted into INR. Okay, so all of these balances will convert from USD to INR. Yeah. And for this conversion, what is the rule that will apply? All the assets and liabilities. All the assets and liabilities except equity. Please remember, all the assets and liabilities except equity. Equity means reserves and surplus or the equity share capital. Okay. They will be converted using closing rate. They will be converted using which rate? Closing rate. Closing rate means as on 31st March 2024. Let's suppose if this conversion is taking place on 31st March 2024. So the rate of 31st March 2024 will be picked up. Why is this 31st March 2024? Because this is going to be a reporting date. Clear on this? Now, so this is something which will apply to the balance sheet items, means to assets and liabilities. But to this P&L, what rate do you apply? Standard says you will apply the rate of the date of the transaction. Now, in case of P&L, there are going to be hundreds of items, thousands of transactions. So can you just go and apply this rate of transaction to each and every transaction? No. Practically, it becomes very, very difficult. For a P&L item, it becomes very, very difficult practically. So that's why standard says that instead of using the rate of the date of the transaction, which rate you can apply? You can apply average rate. in relation to P&L, you can apply average rate. Okay, you can apply average rate. Now, in this case, tell me one thing. Now, I have a question for you. Everyone, please listen to this carefully. I have a question for you. In this case, when you look at this trial balance, so let's suppose this is a trial balance of FO1. If it is prepared in USD, so the trial balance is tallied. Yeah. So this trial balance, every time we need to ensure that the trial balance tallies. Yes or no? Everyone quickly confirm that the trial balance has to tally at every point of time. Yeah. So when it is prepared in USD by the company, it must be tallied. Okay, because this was the base with which we picked it up. This was the base which we picked it up. Okay. Yeah. Now, when you convert this into INR, now let's think about it mathematically, arithmetically. Now to this trial balance, some of the line items, we will convert using one rate. Some of the line items, you will convert using one rate. And in this trial balance, some of the line items, we will convert using another rate, which is average rate. Okay. So therefore, the trial balance in INR, which you will get, do you think this will tally? Over to you. Okay, so this trial balance in INR, which you will get after applying these rates of conversion, do you think they will tally? Kiran is saying no. What about others? Do you think they will tally? Over to you, quickly. Do you think they will tally? Rashmi is saying no. Pooja is saying no. Mohammed is saying no. What about others? Quickly here, please confirm. Do you think this will tally? No, this will not tally. Correct? Nidhi is saying no. Sitkala is saying no. In fact, if you look at it arithmetically, it's not possible. It's not possible for the trial to tally. So that's why what do you need to understand? That whenever you will have this situation, a difference will get generated. A difference will get generated. And what do you call this difference as? This is called as foreign currency translation reserve. Clear on this? This difference is called as foreign currency translation reserve. Okay. So you must have heard about foreign currency translation reserve. So can you now understand this conceptually? Where does it come from? This comes from the translation. So this entire process that you follow, what do you call it as? What do you call it as? This is called as a translation. Okay. This is what you call as translation. So when you translate from foreign currency to INR, from foreign currency to INR, for the balance sheet items, you will use closing rate. For the P&L items, you will use average rate. And because of this, a difference will get generated. And that difference is what you call as foreign currency translation reserve. Clear on this? I'm hoping that Srinivasan, you are clear on the average rate also. Yeah, Srinivasan, please confirm. You are clear on this? Great. I think Shambhavi is also clear on this. Yeah, everyone clear? Please confirm quickly. Yeah, great. Very good. So we'll now move further. Okay, so I'll take one example which you need to answer now. Okay. Okay, so now let's look at this example. A company had imported. Okay, so you need to look at this example. A company had imported raw materials worth USD 2,50,000 on 15th January 2002. when the exchange rate was rupees 46 per USD. Company had recorded the transaction at that rate. Fine. Yeah. So that is how accounting should have been done. Payment for the imports was made on 15th April, means after 3 months, when the exchange rate was rupees 49 per USD. Now, as at the year end, what is the year end? 31st March 2002. This liability remained outstanding. Okay, so this vendor balance was what? Monetary liability, correct? So this should have been restated. On this date, exchange rate was rupees 50 per USD. Okay, and what did the company do? Company passed an entry on the reporting date, adjusting the raw material consumed, means the cost of raw material consumed, means COGS, for the difference between the exchange rate. For the difference between the exchange rate. Exchange rate means difference between the rate which was there at the time of purchase of this item and when the payment is made. Means the difference between 49 to 46 is what the company has adjusted to COGS, and that too at the reporting date. So can you comment on this? What do you think about this accounting which the company has done? Over to you. Quickly. What do you think about this accounting treatment? Do you think it's correct or not correct? And if correct, if not correct, what is it that the company should do? Pooja is saying company is correct. Okay, great. What about others? What do you think about the accounting treatment in this case? Is this correct or not correct? Over to you. Rashmi is saying it's correct. What about others? What about others? Is this accounting treatment correct or not correct? Kiran is saying not correct. Venkatesh is saying correct. Ritika is saying company should record rupees 50. Okay, so this should have been recorded at rupees 50. So that means incorrect. Okay, Mohammed is saying this is incorrect. Nidhi is saying this transfer should have been made to P&L. Okay, so means incorrect. What about others? Okay, Shivanna, I'll come to your query. Just give me a minute. Let's discuss this first. Okay. Now, let's look at the question once again. Now, in this case, on 15th of January 2002, on 15th of January 2002, purchase was made. On 31st of March 2002, do we need to restate this liability? Do we need to restate this liability? Yes or no? Yes or no? Yes? Okay. Now, how do you restate? Using the rate of the date of reporting. Now, on the date of reporting, what was the rate? On the date of reporting, can you tell me what was the rate? It was rupees 50. So liability got increased to rupees 50 as against 46. So this difference of 46 to 50, that means of rupees 4. Of rupees 4. Yeah. Where does it go? This will go to P&L. And this is what should have been recorded on 31st March. Yes or no? So on 31st March, the accounting treatment which the company has done is incorrect. And there are two errors which the company has made. One, the amount which they have adjusted, okay, should have been from 50 to 46 as against 49 to 46. Because 49 was not even known on 31st March. Yes or no? Yeah. Second, this impact will not go to COGS. Where does it go? It will go to other expenses under P&L. It's as foreign exchange loss. Okay, clear? Now, subsequently, So let's discuss the accounting treatment which has taken place subsequently also. Subsequently, on 15th April, when this payment is made, now this liability as at the year end is recorded at 50. Correct? As at the year end, this liability is recorded at 50. But on 15th April, what is the conversion rate? 49. Means this amount will not be paid at 50. Instead, this will be paid at 49. So that's why what will happen? Company will get a gain of 1. Company will get a gain of 1 per USD. So this gain of 1 per USD should be recorded in the next year. And where will this gain go? This will go to other income. So you can see the accounting which the company has made is what? Incorrect. Now clear? Everyone clear on this? Everyone clear on this? Srinivasan is asking, sir, this is a notional gain? Yes. So this exchange gain or loss is notional, and that's why it's required to be taken to P&L. Okay? Yeah? Shivanna is asking, sir, what rate is required to be used for share capital reserve? See, when it comes to share capital reserve, you don't restate them. You keep them at the rate at which those were appearing as it is. So those remain unchanged. Okay? Okay, then I think Srinivasan is asking, sir, fixed asset is to be converted using what rate? Now, once again, that will be dependent on whether we are talking about integral foreign operation or non-integral foreign operation. So if it's an integral foreign operation, so you'll have to check whether it's monetary or non-monetary. So can you tell me whether PP is monetary or non-monetary? Tell me, everyone, whether PP is monetary or non-monetary. Everyone, PP is monetary or non-monetary? Over to you. Non-monetary? Yeah. So when it comes to integral for non-monetary, do you need to apply the rate at the time of reporting date? No restatement will be done. No restatement will be done. Now, when it comes to non-integral, for non-integral, at the year end, at the time of translation, for PP, what rate you will apply? You will apply the closing rate. Okay? Because you can look at this chart. Because for non-integral foreign operation, for the purposes of translation, this table is what you need to refer to. See, for non-integral foreign operation, when it comes to translation, whether it will be monetary or non-monetary will not matter. So this monetary or non-monetary, where does it matter? In relation to either the reporting entity itself or integral foreign operations. Okay. So whenever you will be discussing about non-integral foreign operations, what is the rule you will have to follow for translation? All assets and liabilities, irrespective of they are monetary or non-monetary, apply closing rate. P&L, incomes and expenses means P&L. What did we discuss? Apply the average rate. Apply the average rate. Okay. Clear, everyone? Any questions so far? Any questions, any doubts if you have so far? Over to you once again. Okay, I think Rashmi answered this. Great. Any questions so far? Any doubts if you have? Okay, so I think this query comes from Nidhi. Nidhi is asking, sir, for income and expense, there is an average rate, then why at the date of transaction? See, if you look at the requirement of the standard says that you will use the rate of the date of the transaction. Okay. But then it says practically to follow the rate of date of transaction is difficult. So that's why practically, what do you use? Average rate. Okay. So it's not that you cannot use the rate of date of transaction. Okay. Yeah. Practically, because that becomes difficult to do that. So that's why you will apply the average rate. I understand you have a query. Yes. I think someone raised hand. No. All right. And any more queries, any more doubts if you have, any more questions? Everyone? No? Clear so far? Great. So let's move further on this. All right. So now the next concept is about the forward exchange contract. Forward exchange contract is what? You can say it's a kind of derivative. Okay. And what is the purpose of the forward exchange contract? So let's suppose a company has sold goods. Okay. Say worth of USD 10,000. Now, in relation to the sales which the company has made, what is going to happen? Company will have a debtor. Company will have a debtor in respect of these sales. Yes or no? Yeah. Now, because it's a foreign currency receivable and this money is not received immediately. So let's suppose today this sale has taken place and let's suppose the money is expected after 6 months. Okay. So say this sale took place on 1st of March 2024 and on 31st March this balance remains outstanding and this money is not yet collected. So let's suppose till 25th of May 2024 this money is not yet collected. So now in this case this company will get exposed to changes in foreign currency. So tomorrow when the money will be collected, what will happen? Say on this date, say the rate of conversion was 83. And let's suppose, say today money gets collected, rate of conversion is 83.5. So what will happen? There is an exposure to the foreign currency. And it may also happen that this rate may go down, say it becomes 82.5. Yeah. So the amount which this entity will receive may go up or go down. Can you see this or not? May go up or go down. And why is that so? Because of its exposure to changes in foreign currency. Because of its exposure to changes in foreign currency. Correct? Now, to avoid this exposure, at times, companies enter into a contract with the banks. Okay? And what is that contract? That as on today, they will fix this conversion rate, irrespective of the movement which will take place in the future periods. Okay, so whether this rate becomes 83.5, whether this rate becomes 82.5, or whether it becomes 85 or 80, it will not matter to them. Why? Because they have frozen this rate with the banker. Okay, and how is that rate frozen? By entering into a contract which is called as forward exchange contract. Okay, yeah. So now, in relation to this forward exchange contract, there is an accounting requirement which this accounting standard suggests. So let's discuss that accounting requirement. Now, these forward exchange contracts could be of two types, speculative or not speculative. Speculative means which is intended for trading or speculation purposes, and the other one which is not intended for trading or speculation purposes. So in case the forward exchange contract is not intended for trading or speculation purposes, then what do? Very simply, the premium or discount on that contract. What do you do on that? That will be computed and charged off to P&L over the life of the contract. Charged off to P&L over the life of the contract. So let's look at this example to get some more clarity around this. Okay. Rao Limited purchased a plant for 1 lakh USD on 1st February 2016, payable after 3 months. Okay. Company entered into a forward contracts on this very date, on 1st February 2016. Company entered into a forward contract for 3 months at the rate 49.15 per dollar. Actually, the exchange rate on 1st Feb 2016 was what? 48.85. But the company froze this rate. Means they have frozen this rate by entering into a contract, and this is the deal, 49.15. Means they will pay at 49.15. Whether it goes up or down, it doesn't matter to the company. So how do you record this? So now this is the forward rate and this is the spot rate. So the difference between these two is what? 0.3. So 0.3 per USD. And how many USD do we have? 1 lakh USD is there. So if you convert that into INR, so 1 lakh USD into 0.3, it becomes INR 30,000. So this INR 30,000 is what you call as premium. Okay. And this is required to be amortized. This is required to be recorded over the life of the contract. Over the life of the contract. So now what is the life of the contract? So in our case, this 31st March 2016 ends here. Okay, after 2 months. After 2 months, it ends here. Okay, so now as at the reporting date, the books of accounts will have to be closed. So for this particular year, proportionate expense of 20,000 will be recognized. And this 10,000, the balance amount, will be recorded in the next year. Okay, yeah. So 20,000 we record in the first year, 10,000 we record in the second year. Why? Because this has been amortized over the life of the contract. Clear on this? Yeah. Over the life of the contract. So I can see this query coming from Srinivasan. He is asking, notional gain should be recognized in translation reserve, not to P&L? No. So again, that will be dependent on what we have discussed. So in case monetary asset or liability is restated, where do you take it? P&L. In case it's a translation of a non-integral foreign operation, where do you take it? Foreign currency translation reserve. Clear? Okay. Now moving further on this. Now forward exchange contract, one we discussed was non-speculative. Let's suppose if it's a different category, means let's suppose this is speculative. In this case, what is required to be done? Very simply, standard says that the contract value will have to be marked to its current market value. Means its current market value will have to be determined, and the gain or loss which will arise, that will go to P&L. So every reporting date. So let's suppose there's a contract we enter into 25th of May 2024. Okay. And let's suppose this is speculative in nature. So now on 31st March 2025, what do you need to do? On this date, its MTM will have to be worked out. MTM means mark to market, means its current market value will have to be worked out. And the change. So let's suppose its value as on this date was 1,000. Its current value, let's suppose, becomes 900. So this change, depending on whether it's a gain or loss, this will go to P&L. This will simply go to P&L. Okay, clear on this? Now, moving further onto this requirement in relation to long-term foreign currency monetary items. Long-term foreign currency monetary items. AS11 gives an option. Okay. And what is that option? That if any exchange difference arises in respect of long-term foreign currency monetary items, borrowings. Let's suppose a loan has been taken. Okay. This loan is taken for 10 years. So is it long term? Yes. Now let's suppose this loan is taken in foreign currency. So is it a long term foreign currency balance? Yes. Now because it's a borrowing, so that's why, will you call it as monetary or non-monetary? Over to you. Because it's a borrowing, so will you call it as monetary or non-monetary? Over to you, quickly. Will you call it as monetary or non-monetary? Monetary? Great. So Pooja, Rashmi, I think Ritika, Subhijit, they are all saying it's monetary. Very good. So now, whenever there is a long-term foreign currency borrowing or a monetary item, any exchange difference which arises on them. Okay. Now we need to find out if, let's suppose, that loan is in relation to an asset. So let's suppose that loan is in relation to an asset. So what can you do? That Forex will be adjusted with the cost of that asset. Okay. So if that loan is in relation to asset, then the Forex impact in respect of such loan will be adjusted to the cost of the asset. Otherwise, let's suppose if that loan is not in relation to the asset. Let's suppose this is taken for various expenses, maybe for working capital requirements. In such a case, any Forex which arises on that, will you adjust it to the cost of the asset? No. Why? Because the asset is not identified. So where do you take it? You will take it to reserve under the head foreign currency monetary item translation difference account. So it's a kind of reserve that you create. It's a kind of reserve that you create. Okay. Clear on this? Yeah. Clear on this? Yeah. So any questions, any doubts that you have so far, please let me know. Yes, quickly. Any questions, any doubts? And I would request Mr. Ajit, if you would just also open this window for the students to ask questions. So everyone, you can just feel free to ask questions, any doubts. Then I think this query comes from Ritika. So Ritika is asking, in case of foreign exchange rate, AS4 will apply if the payment has been received before the board of directors has approved the financial statements. No, I think you need to de-link these two topics. See, when a payment has been received subsequently, okay, so in relation to that payment, what do? You will adjust it as and when that payment is received. It's not an adjusting item which you will go back to the reporting year and adjust it. Okay. And same is the case for AS11 also. So AS11 will not get impacted because of this. Fine. Then I think this other query was from, sorry, I missed out on the query. Okay, I think this query comes from Kamal. She's asking, so question related to previous chapter, change in depreciation method is a change in accounting estimate. Yes. And change in inventory valuation method is change in accounting policy. Yes. And why? See, very simple. Change in depreciation we have discussed. See, depreciation is an estimate. So whenever you change an estimate, you will call it as a change in accounting estimate. Fine. Now, let's talk about inventory valuation. Can we say that the valuation of inventory is on estimate basis? No, there is no approximation. It's done with 100% accuracy. Where is the approximation involved? Where is the estimate involved? So that's why It's not a change in accounting estimate. It's a change in accounting policy. Clear? Then I think Rashmi has a query. Rashmi, please go ahead with your query.
Hello, yes, sir. Good morning, sir.
Good
Sir,
morning.
sir, I have doubt in accounting standard 11 and accounting standard 16 borrowing cost. Loan is taken in the same is borrowing, मतलब capital asset या long term asset is the capitalized. But here is given accounting standard 11 is the option is the go to profit and loss account. पर how to know कि कौन सा standard apply करना है?
See, when it comes to this AS11, okay. Now, as regards AS11, it's a very specific situation you need to look at. And what is that very specific situation? It has to be a long-term foreign currency monetary item. Okay. Now, in case it's a long-term foreign currency monetary item, only then AS11 will apply. Yeah. If there is a short-term loan, let's suppose, to that AS11 will not apply. Okay. To that AS11 will not apply. Understood? It's only for a very specific type of arrangement that AS11 gives you an option. So that is how you need to look at it. Every time you'll have to analyze it. That is it so specific which is covered under AS11? If yes, then you will come to AS11 around this para 46, 46A. Otherwise, you will remain under the other accounting standard. Clear?
Yes, sir. Thank you.
Okay. Then I understand, Pooja, you have a query?
Yes, sir.
Yes, Pooja, please.
सर फॉरेन करेंसी ट्रांजैक्शन रिजर्व अकाउंट जो है वो रिजर्व एंड सरप्लस में से एडजस्ट होता है या मतलब P&L से?
See, it will not get adjusted with anything. You can say it's a separate type of reserve which will be presented separately. Okay, so it's a different reserve altogether which you will present separately, but it's a kind of reserve.
कहाँ रिजर्व मतलब कहाँ पे दिखाया जाएगा सर, ये P&L में या?
No, this will not go to P&L. This will go to balance sheet under reserve and surplus. So under reserve and surplus, you will have various types of reserves. One is your retained earning, or it could be your say P&L balance. And similarly, this reserve will also be appearing over there. This will not hit the P&L. This will go to reserve only. Clear? All right. So see, we are not yet done. So even though you have queries, you have doubts. So I think we can just keep discussing your queries as and when you will have that. And in the meantime, I'll also start with a new topic now, which is about deferred taxes. All right. Yeah. But in the meantime, if you have any questions, any doubts as around AS11, please let me know.
Good morning, sir.
Yes.
So
Good morning.
It is a transaction, then why it is called translation reserve? Foreign currency translation reserve.
Are you talking about this last one? Are you talking about this?
Foreign currency transaction reserve. Translation reserve. So my theory is any special reason to correlate the translation, or it is just a term?
Yeah, because it's a specific notification which was introduced. It was a specific accounting requirement which was introduced in the accounting standard. So that's why, just to identify that this particular accounting has been done, for which the impact can also be identified categorically, separately, this nomenclature was given. Okay, so that whenever you look at the financial statements and you find this reserve, so you'll understand that the company would have done this accounting. Okay, so that's the whole purpose of doing this.
Thank you, sir.
All right.
Okay, thank you.
Yeah. Then I think Subhajit has asking, can you please provide those PPTs? Yeah. So of course, see, all of these presentations that we have been discussing, these all will be available to you, and these are going to be your notes. So I would request everyone that you should make notes for yourself during the course of our discussion, along with the presentations that will be shared with you. So either way you can do. If you want to make notes for yourself, you can do that. If you just want to follow those presentations and use those as your notes, you can also do that. Okay. All right. Okay, so now I'll just move on to the next topic. And we can just keep discussing your queries. Huh? Okay, now moving on to the next accounting standard. I understand there's a query coming in. Yes. Yes, Kiran, please go ahead.
गुड मॉर्निंग सर.
Good morning.
सर एक्सचेंज रेट जो है वो ऑल टाइम चेंज हो रहा है, तो जो भी डिफरेंस आएगा वो हमेशा P&L में डालेंगे, एडजस्ट करेंगे P&L से.
No, so exchange rate, I think we discussed few situations. So let me just quickly summarize that for reference of everyone. And please don't get confused. So if you have questions, just keep asking this. First situation is going to be what? When it's a integral foreign operation. Okay. In case of integral foreign operation, if the exchange rate is changing, then where do you need to apply that? Only to monetary asset or liability. In fact, let me just go to one working file. Over there, we can discuss this. So the first situation is going to be what? Integral foreign operation. In case of integral foreign operation, only for monetary items. What do? You will do the restatement. Okay. For integral foreign operations, if there are any non-monetary items. So do we need to do the restatement? The answer is no. Clear? So this is first part. Now, because of this restatement, any impact which arises, where does it go? P&L. Okay. Now, second situation. If it is a non-integral foreign operation. In case of non-integral foreign operation, when it comes to translation, translation means its trial balance will be translated from foreign currency to local currency. In that case, what is the rule you'll apply? Assets and liabilities. Okay. Both monetary and non-monetary. So which rate you'll use? Closing rate. And P&L items. Which rate you'll use? Average rate. Okay. And due to this conversion, the impact which will arise, where will it go? It will go to FCTR. It will go to FCTR. Okay. Now clear on this? Tell me. Kiran, now are you clear on this?
Yes, sir.
Okay, great. Maybe similarly, the way I have done, you can also prepare your notes, or otherwise these notes will also be available to you, but for your reference, because if you note down yourself, it becomes easy for you to understand and appreciate later on. So that's why I would strongly recommend that please make these brief notes. Okay, this will help you at the time of examination when you will be revising this. Otherwise, there are going to be a lot of concepts, and you may mix up a lot of things, and that is where you get confused. So just to avoid that confusion, this will help you. Okay. Okay, Muhammad is asking, sir, when no depreciation is charged on assets, तो वो FCMI TDA account में जाता है amount? No, so whether you charge depreciation or not. Okay. In fact, this depreciation on the assets has got nothing to do with the accounting requirements of AS 11. So once again, I would suggest keep these separate. Okay, keep these separate. Means the one which is there under AS 11 and one which is there under AS 10. So depreciation requirement you will cover under AS 10. Okay, and this AS 11 requirement has nothing to do with whether the depreciation is charged or not. Every time this is how you need to approach this. Okay. Then I think Shambhavi is asking if you could just explain illustration 7. So it will be helpful if you can just point out maybe the specific query on that. That will be helpful. Okay. So any more questions, any more doubts that you have? Okay, I think Shivana has a query. Shivana is asking, sir, if the rate is high while making the payment, whether we need to book gain even though there is no fund outflow? Yes. See, this restatement translation that we have been discussing, this is not dependent on whether the payment is made or received or not. Okay, for a liability, payment will have to be made. So that's why we call it as notional gain or loss. Okay, so as at the year end, the company, while preparing financial statements, wants to understand that if on this particular day this settlement would have done, what could be the possible impact on the P&L? And that is how this is prepared. That is how it's been present. That's how it's required to be presented. Understood? Clear? So I think we are still left with one more topic for today, that is about deferred taxes. I'm sure because we are left with very little time, so we'll not be able to cover that. So we'll have to just move on that to tomorrow's discussion. But if you don't have any questions, doubts, I can just quickly start that. Maybe we can discuss that for next 10 minutes. Yeah. All right. So now moving on to AS22, again, a very, very important topic. And I would say also for the purposes of our examination, it should be considered to be an important topic. Now, what is deferred tax? What is the meaning of deferred tax? How is it relevant? At times, this topic becomes confusing, and this also remains tricky. This bothers us quite a lot. So that's why I think we need to understand this conceptually quickly, first of all, and then we'll discuss its accounting requirements one by one. So there are two things which we need to understand in relation to deferred tax. First is the requirement of income tax. Income tax, we all understand what is income tax. So every year, the company, the profits which it will make, will have to pay income tax on that. Correct? Every year, on the profits which the company will generate, company will have to pay some income tax. Yeah. Now this profit on which income tax is required to be paid may not be same as the profit which is shown by the company in its books of accounts, or you can say in its financial statements. Say for example, in the P&L, company is showing a profit of rupees 10 crore. Okay. Now, is it necessary that while filing its income tax return, basis which company will have to pay its income tax, the profit amount will also be 10 crore? The answer is no. Why? Because the taxable profit may not match with the accounting profit. Now, what is accounting profit or loss? Means that profit or loss which is reported in the financial statements, which is reported in the P&L. When it comes to the income tax return, income tax act, income tax rules, income tax laws, they have got various requirements. Okay. on the basis of which income tax is required to be computed. And while the income tax is computed, some of the requirements which are there under income tax may not be similar to what is there under accounting standards. So that means there are differences between accounting requirements and income tax. Now, one of the example, or you can say very, very simple example in relation to that will be depreciation. So let's try to understand that first. See, when it comes to books of accounts, can you tell me how do you compute depreciation? Over to you. In the books of accounts, what becomes the basis for depreciation? How do you compute depreciation? Mohammed is saying, sir, depreciation for accounting में month wise लेते हैं, income tax में year wise लेते हैं. This is right. Anything else that comes to your mind as around the depreciation which is required to be followed under books of accounts? So how do you compute depreciation? Over to you quickly, huh? Quickly, how do you compute depreciation? Yes. What will become the basis for computation of depreciation in the books of accounts, in the financial statements? Kiran is saying on cost of asset. Sunil is saying WDV. Ruhani is saying salvage value. Then I think I missed one response. Rashmi is saying computed on date on use. Pooja is saying residual value and life. Very good. See, depreciation in the books of accounts, we discussed this, is computed using what? Useful life. Using residual value. Yes or no? But when it comes to income tax, do we have the same useful life under income tax which is there under the books of accounts? Which is there or which is used for the purposes of preparation of financial statements? The answer is no. Under income tax, what do you follow? Companies follow rate regime. Rate regime means rates of depreciation have been prescribed. And those rates are mandatory. Means the company will have to use that rate of depreciation. Under books of accounts, useful life is what? It's an estimate. It's the estimate of the management. Yeah. So there is a difference. Yeah. Now, because of these differences, what may happen is that the depreciation amount which we compute in the financial statements may be different from the depreciation which is computed for the purposes of income tax computation. For the purposes of income tax computation. Okay. Now, these differences which arise between taxable income and accounting income, what do you call these differences as? They are called as timing differences. Okay. What do you call these differences as? Timing differences. And on these timing differences, deferred tax is required to be computed. Yeah. So I think we are just coming closer towards the session. So I'll not be able to, get into more details. We can just close our discussion over here. But as I discussed, we just touched upon this topic. We couldn't discuss this much. So we'll cover the remaining part of this topic tomorrow in our next session. And tomorrow we also plan to cover 2 more topics on revenue, AS7 and AS9. So that's why I would request you to, come prepared with those 2 topics also. And you have also got time to go through this topic AS22. Okay. Yeah. So now I can just, maybe spend some more time discussing your questions, your doubts before we conclude our discussion. Okay. Over to your questions, doubts. Yes, we are done. So if you want to just move on, just feel free. But if you have got any more questions, any doubts, We can just discuss that. Yes, any questions, any doubts that you have? Okay, so I think Shivanna is asking, sir, as per the, okay, no, that was the response. Okay. Rashmi is saying next session for AS. Yes. So we'll be covering this AS 22, plus we'll also be covering the revenue topics, AS 7 and AS 9. Okay. So the target, of course, will be to cover these three topics, but let's see as to how the things progress. Yeah. As around these notes, these presentations, of course, yeah. So they will get uploaded. So Pooja is clear on this. Rashmi is clear on this. I'm just hoping everyone is clear. And you have been able to understand the things that we have discussed. I would again suggest everyone to just practice more and more questions basis the discussions that we have had today. Yeah. Okay, so I think this query is coming from Ritika. Ritika is saying Companies Act में SLM या फिर WDV दोनों में कोई सा भी use कर सकते हैं, and income tax में it's WDV. Yes, of course. Yeah. So the approaches which are there in the books of accounts and the income tax, they are different. That is what leads to the differences, and which we are going to discuss in more detail tomorrow. So you are absolutely right. Yeah. Okay. Any more questions? Any more doubts? No? All right. So thanks everyone for your time and for your wonderful participation today. Thanks so much. So we'll meet tomorrow and we'll continue with our discussion on the accounting standards. Thanks once again.
Thank you.